If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills, because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
Larry Tentarelli, Blue Chip Daily. Always great to have you, Larry, and to be able to talk to you. Welcome back to Face.
Well, good morning.
Good morning, partner. So let me open it with this. I know that you're very disciplined. A lot of things are above the moving average. My question to you is, with the concentration of the market being so narrow, are you finding it more difficult to find long candidates in this environment, or are there just as many as there have been over the past year or so?
No, a little bit more difficult. So some of the sectors like industrials have been a little bit weaker. Materials have been a little bit weaker. So yeah, I've got slightly more cash, not too much. I'm about 12% cash. I try to stay under 5%. But some of the industrial stocks have been rolling over a little bit. The banks just picked up, but yeah, it's a little bit more narrow. So I'm pretty much concentrated in tech right now, in the S&P 500.
Okay, there was a note, I think it was out of Goldman, that TMT, which is what? It's telecommunications.
Yeah, tech, media, and telecom, I think.
Oh, yeah, largest amount of selling in June on record. I'm not sure if it was hedge funds, institutions, but that was their comment, and it's on record. So it's not just, something that happens every year.
Yeah, I'll tell you that the odd thing about that, though, is because I saw the same graph, and I think it also showed that November of 23, January of 24, and April of 24 were also really big spikes in selling by hedge funds, and those were all at the lows. So I think that, it's almost, you got to look at it a little bit of a contrarian indicator when you look at that graph and it shows that their major selling was right before, tech turned up every time.
Okay. So why don't you tell us what you're looking at, what you're doing?
Yeah, and then I'll let you, you do a great job of calling out the chart, so I can dial up, whatever you call out. But really just the key thing to start with the indices, triple Q and the S&P 500, and I get it that the S&P 500 is concentrated in the bigger tech names, but I mean, that's really what's been working for a while. They're in big uptrends, and the key thing is these charts have recent weekly base breakouts. So I mean, these are coming out of pretty constructive weekly base breakouts. The uptrends are intact. I'm long. I think they go higher. We're in a seasonally pretty strong period. So this is triple Q seasonality. This is stockcharts.com. You can see my screen, right?
Yes, got it. So
yeah, their max look back period is 20 years. So that's as far as they go back. And 20 years is pretty relevant. But July over the past 20 years, it's been up 90% of the time. Average return is 3.9%. So here's the thing, seasonality, it's never, ever a guarantee. Each market is unique. We've got unique circumstances. But, just from a seasonal point of view, we're going into a pretty strong month. Also, election years tend to be seasonally bullish. And people will bring up, well, what happened in the year 2000. There's always outliers. But if we look at 96 years worth of data, it says that election years, the second half is generally pretty strong. So what I see is charts are in uptrends. They're not, grossly extended or anything like that. They're really coming out of base breakouts. But there's other groups besides tech. The banks look pretty good. Bank of America is breaking out. JP Morgan's breaking out. JP Morgan's a super important stock. So is Bank of America. So when we see these big banks breaking out, that's not a bad thing. I will say the industrial.
They look so much better. They look so much better than the XLF.
Yeah.
You put up the XLF, it can't even get back to 42 yet. Okay.
Yeah.
So,
I don't really like the XLF. It's got, Berkshire is the biggest position.
Oh, then maybe that's the reason.
Yeah, and Berkshire's not bad, but it's a little bit flat. It's got the credit card companies; they've been a little bit weak. That Visa chart.
Yeah.
I got to tell you, I do hold some ETF positions, but XLF. If I was looking at the banks, I would just stick with the big banks. JP Morgan, Goldman Sachs has a pretty good chart. That's in the upper right-hand corner. Now, the key thing, and that's just under new highs, they've all have earnings next week, but the banks are showing some strength. Energy's been picking up a little bit.
Would you buy this break in NVIDIA?
Yeah, so I've got, I've been holding NVIDIA for a while. I could add to it, but I'm just waiting. So right now, for me, it did get extended up here. It was over 80 daily RSI. So
I did anything out of that key reversal after a parabolic move?
No, I really don't. When I look at the chart overall, it just had a really big breakout, but it ran 80%. But no, I think this is going to turn out to be probably a consolidation like what we had March through May. And keep in mind, last year it consolidated for about 6 months.
Yeah.
Last year, June to November, it didn't do anything. But no, I do not think this is a blow off top, parabolic top. If you look at the weekly RSI, it was in the 80s, right? Back in March. It pulled back maybe 20%. Now, I think I'm holding NVIDIA.
Look at where the RSI is now if you go back to that one.
The weekly?
I call that a momentum divergence up there.
Yeah.
So RSI, anyway, that's the way I see it. I would have rather had it taken out 80 at the last high to confirm the high rather than not confirm the high with momentum.
Yeah, I think my call for the past couple of weeks has been, I think it could trade down to maybe 100 to 110.
Okay, yeah.
That would make sense to me. But no, I think that when we, if we circle back up in 6 months, I think NVIDIA's got new highs in 6 months.
Okay. All right. So Larry, I want to ask you something. I brought it up to a lot of my guests. So
yeah,
my sister would be like, maybe, someone that would subscribe to a service, but she doesn't even do that. She has a fiduciary. All right.
Right.
So she said, Dale, I'm going to get out of my positions in October. I'm going to get out of the market in October. And I'm going to get back in after the election. Can it be that, Pat?
I mean, anything. Yeah, man. Anything okay. with this election, anything could happen. But I've got to say that, for the people that I know, and unless you're just a day trader or a swing trader, but if somebody is, let's say, in their 401k. Or something like that, it's just a coin toss. Maybe they get out of everything, and maybe the election, things get a little.
Yeah, my point is that's John Q. Public. Okay, so if my sister is saying and thinking that, she's not the only one.
Yeah, sure.
So my point is, can we have clear sailing through the end of October, and then people get out, and then we have a sell-off, and then they'll be able to buy a nice dip? Is it possible, Larry? And I know I could see how we could get to 6K on the S&Ps. That's a measured move from the breakout at 4,800.
Yeah.
But isn't it possible that there's some kind of surprise prior, maybe this summer, before the election, that there's pressure put on longs because they're worried about something domestically, politically? Maybe it's maybe jobs. We start getting weakness in jobs, and
Oh
the
yeah,
Fed.
absolutely. I would, if there was a 10% pullback in the index anytime between now and the end of the year or something like that, it wouldn't
You would love
surprise
it.
me at all.
Okay.
You
You
know,
would like that.
on average, the S&P has a 10% pullback about once a year. We've been in a pretty low volatility uptrend. But so could it pull back anytime? Something weird could happen with the election process. We've been in an uptrend for a while, but I do think that if there is any, 5%, 10% pullback, whatever it is, I do think that that's going to turn out to be viable. But that's based on what we know right now. Things can change a lot. But my view is that I think we're going to work higher over time unless there's a recession that comes out of somewhere. But my base view is we're in an uptrend and I expect it to work higher.
Okay. Doing anything with energy's been a star. I'm sure you're in some oil issues.
I'm actually not. I was in XLE, and I've gotten energy wrong pretty much for the past 6 months or so, maybe a little bit longer. I bought it on the way up. I closed it out on the pullback. I haven't done too well with energy over the past 6 to 8 months, but there's a couple charts I like better than XLE. So WMB is a really good chart.
Well,
if I
yes.
was going to buy energy tomorrow, I would look at FANG.
Looks great. Yeah.
Great chart. This right now, as of today, this is probably my favorite chart in the energy sector. So I look at it, but XLE I think is a lot like XLF. I think you can do better.
Too many dogs.
Yeah. There's a lot of stuff. So what I like to do, I like to focus on those high relative strength stocks. So I think FANG is set up pretty well.
Okay. Yeah, that looks good. Anything in the miners? They've been kind of quiet, pulling back. They're going to have a big update today.
Yeah, I think, I've been holding the copper miner. So I bought it somewhere in here and I rode it up there and I held it down here, but I'm still holding this. And the momentum right now, when you look at the copper miners, the daily moving averages look ready to cross higher. So, copper, this group is a lot like the energy group, but these charts are still they're in uptrends. I'm long. Silver held over the 50-day right here, SLV.
Yeah, it looks great.
So, this is a choppy group, but I am holding GLD and I'm holding copper miners, and I do think they're going to work higher. But just been a little bit choppy, but I like them.
Well, if the dollar is peaking here and this would be a failing rally, it can't hurt them.
Right. Yeah, exactly. And the dollar's been strong.
Yeah. So we'll see. It looks like a possibility of it rolling over. If you put a Dixie chart up there, it's a lower high.
Yeah.
Oh yeah, Microsoft. I don't like the divergence in Microsoft, Larry.
You see, here. So when you say divergence, are you talking about the RSI?
Yeah. Yeah. Look at we're under 70 with this move up here.
I think these are all, and everybody, a lot of ways to look at the market, but what I see on these charts, when you look at this weekly base breakout in Microsoft, You've got the same thing that's
Yeah,
going on in
Amazon.
Amazon right now. You know, that's got a weekly base breakout. Apple
Yeah,
has a weekly base. And I've got to tell you, Dale, when I look at these weekly charts, these are weekly base breakouts in some of the biggest companies in the world. You know, Google's been really strong. And I just think these are going higher. You know, PE, forward PE for Google's 21. I think Microsoft is in the 30s. You know, there's a lot of talk, and you and I follow each other on Twitter. And
yeah,
there's been a lot of talk for the past 12 months that we're in another tech bubble, you know, but the fact of the matter is, and I've posted some you know, data on my Twitter page. People can find me at Blue Chip Daily. But something that I posted recently, it was from somebody at Bloomberg, and I'm just going to dig it up real quick. But basically, what it shows is that if you look at, so here, this is from Bloomberg. So this is the S&P 500 tech sector, right?
yeah.
Forward PE. So right now we're about 40, and 40 is not cheap, you know, but at the
Look at where it
bubble,
was. There's no
yeah, at the
comparison to
bubble,
Yeah,
and hey, man, I was here, you know, I was long 120, and at the
yeah,
top in 2021, before we got that sell off, it was at 60. So, you know, when I look at these charts, you know, and I was there back here when Cisco was 100 times PE, and I think Oracle was 100 times PE. And when you look at these stocks like Microsoft at 34 times forward, you know, Micron Technologies, a big tech stock, 13 times forward earnings. I just don't see it, man. And I'll be the first one to tell you, I'm not a perma, you know me, I'm not a perma anything. I just stick with the charts. But they're, you know, when I look at these charts, Apple's
yeah.
what, 25 times forward? You know, these aren't, to me, these are not 30 times forward. They're not bubble valuations, and they're coming out of pretty long weekly base breakouts. So I think it all works higher, you know, with normal pullbacks, 3%, 5% along the way.
All right, key thing that you said, breakouts. So what does that do for a trader? Now that you had these breakouts, you know one thing. You can stay long unless it negates this breakout. Closes back in the Apple under 200, tell you there's something wrong. In
Right.
Amazon, closes back under 191, negate the breakout. So you can let them run, but also be aware of when the picture would change. If you're trading a breakout, you don't stay long if the breakout is negated. Right,
Right.
Larry?
Yeah.
So, I
And
mean,
it's all, you know, the key thing you make, that's a great point, but it's really based on the time frame. So if I'm, let's say, you know, trading on a weekly or a monthly chart, and I got a bigger time frame, I'm going to give a lot more wiggle room. So for me,
yeah,
this Amazon trend, I think this trend is good over 175. But yeah, for a day
okay.
trader or a swing trader, you know, you want to keep tight stops. And, you know, if I'm a day trader or a swing trader, yeah, below 190, I'd close out the breakout trade.
Yeah, that's right. Okay, I mean that's 5%. So
Yeah.
you know, that's enough room to give any trade, I think.
Yeah.
Don't
And,
you?
and,
I
and, you
mean,
know,
now
once again,
what's your average risk when you're entering? What do you base you know, what are you risking price wise when you get into a lot of trades? 5,
my
10%?
my average stop on a position is about 10%.
Okay.
And I usually start in the 3 or 4% range. But I don't want to risk on any new trade. I don't go over 50 basis points of equity risk. So that could be a 5% position and a 10% stop. It could be a 10% position and a 5% stop. But I generally give my positions about 10% to work with, just because, you know, it's not a shorter trade. I want to give it a little bit of wiggle room, but yeah, I don't like to start off behind the 8 ball, you know, at all.
Well, a trader friend of mine, Mike Venezia, was talking about stocks that had nuclear in their title last week they were all exploding like that, to the upside, like bombs. Do you know what I'm
You
talking
know,
about?
I've been watching this group, and I've got a little bit of this GE Vernova that I got from the spinoff. But the nuclear group, it's been a little choppy over the past few weeks. They had big breakouts to start the year, but over the past, 4 to 6 weeks, they've been pulling back. Vistra, I think, is the biggest one, VST.
Okay.
I think they're the biggest independent nuclear provider. And then you've got NRG, which is NRG Energy, and they're just a little toppy looking right now.
They must have been low floaters he was showing, because they were exploding.
Oh yeah, might have been some of the smaller, market cap. Yeah, this has been a really strong group, but it's just got some pullback to it right now. I don't know why, but it does. It's just something I'm keeping on watch.
Does this trade with uranium fairly closely? Is there there is a relationship between uranium and nuclear energy?
Oh yeah, because they use uranium as the fuel for nuclear. Right. Yeah, and I think that there is, and that's one of the tricks with these commodity trades like CCJ. I like CCJ. I don't have a position here, but I think that's the best way to play nuclear. The trick with these commodity, they just tend to be a little bit more choppy based on, the underlying physical.
Yeah.
And I do think commodities tend to chop more than they trend.
Okay. Well, Larry, anything you want to wrap it with? And I want people to know how to get a hold of you. They definitely should follow you on X.
Yeah. Best place to find me. It's at Blue Chip Daily. You can also find my website. That's bluechipdaily.com. We offer a 30-day free trial. So if you want to, join for free, see what it's all about. I've got a daily Twitter page where I post trade alerts and things like that. But no, it's, overall markets are trending up. I always expect that 3 to 5% pullback along the way, because that's just what the averages are over the past 96 years. There's 3.5, 5% pullbacks per year in the S&P 500. I think we've only had maybe one over the past 6 months or so. So I always build into my expectations that we're going to get some pullbacks, but for my time frame, which really is more based on the weekly charts, we've got some pretty strong trends that are working higher.
Okay, Larry, great looks and, a very constant and great temperament review of what you're doing and the risk. It's always great to have you come in here and edify us on different issues and your tactical style in the markets. Appreciate it and recommend people go check out your free trial.
Dale, I appreciate you. We've been doing this now for about maybe 4 or 5 years, man. You always ask great questions. I appreciate it. I hope to see you back in 3 months, and I hope that you and all of your viewers that celebrate July 4th, I hope everyone has a great holiday and a great weekend.
Okay, well, yes, Independence Day. But like I was saying at the beginning of our show, nothing wrong with being dependent upon people that have skills to collaborate and cooperate with. And you're one of them, Larry. So thank you, my trading warrior brother. That's going to be a wrap for us. Follow Larry, check him out at Blue Chip Daily. And you're welcome. People are thanking us, Larry, and everyone.
Thank you. Thank you, everyone, for listening.
And Larry, be careful with your fireworks this year. Let's
have
all our let's have all our fingers for the Friday, so we could click the button on Friday live for the NFP. Be here, trade it with us, and don't just count your pips, count your blessings. Adios. Have a great holiday, everyone. Thanks again, Larry.
Thank you, Dale.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.